as a financial advisor for over 20 years. I've literally spoken to over 1,000 potential clients. And in today's video, I'm going to share with you the 7 things you need to know about before you visit with a financial advisor. Let's go for a walk and we'll talk about it. And the first one to know about is that first conversation with a potential financial advisor. It should be free. It's a chance for you to get to know that person better, and it's a chance for them to get to know you better, because you want to make sure that this is a match. So some people are hiring a financial advisor just for a project, right? I have this question I'd like you to help me answer. I'd like a financial plan. And many financial advisors don't do work on a project basis. But if they do work on a project basis, then you want to make sure, do they have the background? Have they done this type of work before? You want to make sure that they're a match for that. And more importantly, if you're thinking you want to work with somebody for a period of time, then you're entering a long-term relationship. And I like to say you're entering a marriage of sorts with very little, if any, courtship. So it's really important at that first meeting give you enough time to get a sense of who this person is as an advisor, and give them a chance of, what are the areas they can help you with. So that first meeting should be free. And some things to talk about, first and foremost to me, I think, is a very simple question that you may not get a simple answer to. And that is, are you a fiduciary to me 100% of the time? And those are the words you want: fiduciary and 100%. And a fiduciary means they legally have to put your interests in front of their own. And essentially, to me, that question is, do you work for me, or do you work for the products that your company sells? And you want somebody that works for you. So that's the first thing is that you should know about, is that first meeting. It should be free, and you should leave that meeting with a pretty good feel of who that person is. The second thing that you should know before your meeting is have an idea of your current situation. How much money roughly, how much money are you making a year? How much money are you spending a year? How much money are you saving a year? A yearly basis, a monthly basis, whichever's easiest for you. And what do your investments look like? So maybe pull down your most recent investment statements so that you have an idea. I have this much money in a regular IRA. I have this much money in my company 401k. I have this much money in the bank or a taxable brokerage account. And high level, my money's invested 70% in the stock market, 30% in bonds, something like that. So have a feel of your current situation, both from your income and spending standpoint, but also from your investment standpoint. Okay, number three is there are 3 phases to the planning process, right? There's the planning side of things, and then there's the implementation side of things, where you have the plan and now it's time to bring that into reality. And then the third phase, is the follow-up, the ongoing service. And be careful, if somebody offers to do the planning for free, guess what? They're going to get paid by selling you something in the implementation process, right? They have to get paid somehow. Personally, I'd rather know exactly how somebody gets paid. What's 100% of how you get paid? And let me decide if I'm getting value for that or not. But unfortunately, in my industry, there are dozens of ways to get paid, and many of which clients don't see, or it's hidden in small font in a 20-page legalese type document. So understand how they get paid and what that planning and implementation program looks like. A typical cost for fee-only financial planning, depending on how much money you're managing, a typical cost is going to be 1 to 1.5% of the assets under management. And I would strongly advise not just looking at what the cost is, but what you're getting for that. You want it to include everything. Any financial question that you might have, anything related to finance. Should you buy a car or should you lease a car? You're thinking about refinancing your mortgage. What are the pros and cons? Anything financially related. Obviously, your retirement planning and Social Security and preparing for Medicare, things like that should be included in that as well. But you want them to spell out what's included and what's not. And for most people, I think what you're looking for, because you don't know, nobody knows, what our future holds. And for many of us, this is going to be a long-term relationship. So you don't want to find out, well, there's this base, but then on top of that base, there's all these other costs. You want your financial advisor to want you to call them. So it is a good thing when your financial advisor is encouraging you to chat with them more often, and say, hey, you're not using me enough. Let me help out in other areas of your life, as long as they're a fiduciary to you and as long as it's a fixed fee. Because the more we know our clients, the more we can help. And which goes back again to that thing about being a fiduciary, making sure that their motivation for that is because they really want to help their clients. And by helping their clients, that's how they grow their company. And that's another good question to ask. Where does most of your growth come from? And obviously what you want to hear is it's word of mouth. It's from existing clients. It's maybe from accountants and attorneys that they have clients in common with. Those are really good things. If somebody is out constantly promoting themselves, looking for business, that might be a negative sign, because good financial advisors will be recommended, just like a good physician, right? If your friends have a good physician, they want you to know about them. If your friends have a good accountant, they want you to know about them. Same thing with a financial advisor. So word of mouth is really powerful. The next question is, are there any regulatory marks against you or your firm? Most financial advisors, if they're registered investment advisors, most financial advisors are going to file an ADV with the SEC. If they're regulated by the SEC, there's a disclosure document called an ADV, which would list or should list any regulatory issues. But it's a good question to ask in that first meeting, and they should give you a copy of the ADV. You should not have to ask for one, but if you do, you do. Now, if a firm's been around 40 or 50 years and they've got a couple marks here and there, that's not unusual. I wouldn't say that they get out of the running because of that, but you want to do some digging. And one of the ways to do some digging is to ask for some references. Who are your past clients? I'd like to speak to some of your past clients so you can get a feel for what type of service do they get, what type of problems, what type of issues outside of whatever you're going to that financial advisor for advice on. What does the scope of services look like? And then a good question to ask that reference is, are any of your other friends also clients of this firm? Because you want to get off of the firm's reference list if you can. It can be hard, but if you can, that can be a good thing to be able to do. And again, I just want to share that, in many ways you're entering a long-term relationship with very little courtship. So another really important question to ask is there any breakup fee? Let's say we work together for a year and we decide it's not a match. Is there any charge that I would have to pay, any breakup charge? And am I free to move my positions to term in the industry as in kind? Where, what you don't want to have happen is they sell all the positions that they have for you, because then in many ways after a couple of years you're locked into that firm because hopefully you've got capital gains. And if they're going to sell all your positions when you leave, then what they're saying is we're going to trigger taxes for you, and you want to be in control of when your taxes are triggered. You don't want your financial advisor saying, well, we're gonna that's a penalty, that's a price you have to pay if you leave. So I want you to have as big of a chance to succeed as possible. And another thing that I think is super important, and hopefully you can get a straight answer on this, which is, what are the types of clients that you tend to do really well by, that you tend to work really well with, and what are the types of clients that you don't tend to work really well with? And hopefully you can get an answer to that. Like for me, if somebody's watching CNBC all the time and they've got certain stocks and certain companies that they want, in my opinion, that person should probably work with a stockbroker. This isn't financial advice, you know, you need to make a decision like that yourself. But if you're really into picking individual stocks, then those types of clients tend to do better with a stockbroker whose job is to execute the trade. You've got the trade idea and they execute the trade. And then, you know, the types of clients that tend to do really well, that I tend to vibe with, are those that, you know, are looking for somebody to say, I could worry about this if I wanted to, but there's other things in my life. So those are the types of questions to ask. And I think it's important to find out what type of clients that they tend to work well with. And I think it's also important to have an idea of when you're going to retire. This is what this whole process is about, after all. And that's why I made this video up here, 5 reasons to retire as soon as you can. I hope you enjoy that video. I'll see you in there. Bye-bye.